Okay, let's do a quick video to learn from. I took a trade on Thursday, so let's see what happened. So, quick analysis, we were kind of dumped lower, then we are correctively moving up. At Thursday in here, I'm still trying to see if we can trade above here, especially because we got some equal highs on ES, especially these equal highs on ES that I was looking to see if we can trade to, and that's why I was bullish with NQ as well. So bullish bias. I was trying to take longs. Okay. Then we got like a nice push higher, corrective move down. That's usually indication that we want to go another nice push up. So I'm going bull. Then I like to mark out my opening prices. 9:30 at there. 8:30 at here, and midnight price. And I like to usually see how the prices kind of line up and how the power 3 could play out according to these price points. But yeah, pretty much I was just looking at these prices. Okay, we're kind of trading at those prices, so in this kind of circumstance I don't really care about these prices, because what do we get from this? Like up here I can kind of anticipate that we are moving lower because we are trading above this, and this would be the general power of 3 where you accumulate, manipulate above these opening prices, and then distribute lower. But yeah, in this trade I didn't really pay much attention in these prices, but so we can kind of remove this. But then what did we do is that okay, identified the liquidity pool, wanted to see that. Okay, push higher, corrective move down, corrective move down, corrective move down. You want to see sell side being swept before going longs. Okay, we swept this sell side, which was also SMT. So you put on an SMT like that and you're bullish. That's pretty nice sign. Okay, we put on a then inversion fair value gap with this first presented fair value gap, and I would mark out the whole range in here because this is the consecutive two fair value gaps that I wanted to see inversed. So then what do? I wait for those to get inversed. This price deck down is a little bit too steep, so that if I try to wait for break of structure, you can see kind of what happens. You wait for break of structure, you never see the corrective move down before you can actually enter in the long. So if you wait for break of structure like this, you are missing the trade. And these are the type of things that you kind of need to learn with experience and stuff like that. But yeah, so I didn't wait for break of structure. Inversion fair value gap is just good enough, so you don't need to wait for. Okay, I wait for inversion fair value gap. I got into the trade in here. After we flip the gap, I get into the trade in that fair value gap and looked to take something like this. Okay, then we see kind of like a steep retracement. I'm thinking, am I going to get stopped out? I told myself I am probably not, and I was in with fairly small positions, so I got into another position at around lower portion of this IFVG, at around here. And yeah, I got into a new position, both like equally large at around there. And that was very nice, so we got filled with that as well. And then we just basically ran to my TP. Yeah, after which we dump lower, and there are multiple reasons to see why would we dump lower. Okay, we got the 830, 930 opening prices all stacked in this region. We actually did have, you can go check this yourself, we did have fairly large opening range gap in this region, so there was a like an actual good region for us to dump lower into that gap. And we got like a space in here, plus some relative equal lows at here and stuff like that. So this is the reason why you don't want to hold your position way too long, especially in these kind of circumstances. So, but yeah, this was very nice trade, and you should learn from this.